This is Mary Ellen McGonagle with the MEM Edge show. I want to thank those that stuck around through our technical difficulties, but we are certainly good to go now. And as I do each and every Friday afternoon, normally at 5 p.m. Eastern Time, I want to say welcome. This is the show where we put you in front of where the action is in the broader markets. And I will say it has been quite a week in the markets, certainly, and I am excited to share with you everything that has happened. And always, as we do, it's with an eye toward helping you prepare for next week and benefit from those areas that are seeing outsized strength. And so let's go ahead and get started. Take a look at what we are going to be covering today. As usual, we are going to look at the broader markets, take a really close look at where we are currently, and again, what we are going to be on the lookout for next week. Looking to strength, and the markets certainly were weakened, certainly going into the beginning of this week. China came in, lots of liquidity, and just we were able to bounce rather remarkably, I would say. So quite a bit in the way of pockets of strength that we're going to go ahead and take a look at. And then the potential impact of the coronavirus. There are stocks, I'm going to be covering about 5 or 6 that are definitely going to be not in a good place as China continues to see an increase in those occurrences with the virus. So we'll just make sure that you're not in front of any of those bigger known stocks, such as Apple. That's certainly one of them. And then seeking safe haven. Yield stocks, certainly one way, but we're going to look at some of the other defensive areas. For those of you that are a little bit more on edge, not everyone is a believer of this rally, so you may want to have areas that can help you buffer any potential volatility that we might see going into next week. So let's go ahead and get started. We're looking here at a daily chart of the S&P 500 per usual. So each bar here is 1 day of trading activity. I've gone ahead and overlaid these simple moving averages. Your green line is your 10-day simple moving average, and the red is your 50. Now these, for the near term, are going to be the most impactful from my work as it relates to the price of the S&P, the NASDAQ, each of these broader market indices in an uptrending bull market. Ideally, the markets are finding support at this upward trending green 10-day simple moving average. And of course, we did get this pullback. It did get a little bit significant here, but take a look. We found support at this 50-day simple moving average. So we did go into the week with a big question mark here. Were we going to be able to retain that support? Where would we go? And of course, we have seen a rather, again, remarkable snapback rally within the markets to the point where the S&P 500 hit yet another new high. It was up 3.2% for the week before today's modest pullback. Let's take a look at some of these other outlying indicators. The RSI, we do want that to be above this net neutral 50. That's indicating that the RSI is positive, and that's a momentum indicator. We can go down here, and I have the moving average convergence divergence. We do want this to be up above this net neutral 0, which we are in fact experiencing. And then the other significance here is the signal, this black line, as it crosses either below or above the red signal line. Now we can see this activity taking place when the market, we did get those first virus outbreaks that were in the news. We did see this negative divergence here, indicating that the upward momentum in the broader markets had shifted to downward. However, we did remain above this net neutral 0. So a little bit of a mixed signal, but for those of you that are subscribers to the MEM Edge report, you'll know that we did not turn bearish. For the most part, we were still advising certainly to stick with your stocks, and then toward the end of the week, getting back into some of these names. So we, again, a positive crossover here that is indicating a potential shift of this very near-term weakness. And the RSI is also positive. So for the most part, at first glance, the broader markets have resumed their uptrend. So we are in good standing. Now, from there, again, it will have everything to do with your personal, whether it's a risk factor or fear factor, but the markets are signaling that we have resumed this uptrend. Now, I think we'll get a lot more information as we drill down further, as we usually do. So the first thing we're going to take a quick look at here are the various sectors within the S&P 500. And this is Candle Glance on StockCharts.com. And so we're looking at a 2-month price chart of each of those broader market sectors. And then I've gone ahead and added the RSI indicator, that relative strength indicator, and then descending order. I want to see where the strength is. And oftentimes this will remain, you'll see strength beget strength, but we're in a little bit of a dicier period. So let's take a look at some of the rotation that we've seen here recently, given this recent 2-week rockiness in the markets. Utilities up here in the forefront. We are going to take a look at our next slide at the 10-year Treasury. We've seen a really significant drop in Treasury yields. So it could be a reach for yield, but I will tell you there are other dynamics at play here with utilities. There's a big movement to these huge corporations that are turning green, Microsoft, Disney, Google, and so forth. That's bringing a lot of the alternative energy utility stocks up, but also could be a safe play. So take a look here, technology. Now, technology did pull back with the markets, but it has also bounced the furthest. It's up 4.6% for the week, the best performer. We're going to drill down and take a look just where within technology. And that, of course, is always going to be of interest, certainly to me, with an eye toward wanting to get in front of those growth stocks that have been able to bounce rather significantly. Staples, another, of course, defensive area with higher yields. There are about 2 or 3 names we're going to cover here because it's all about earnings in this group, as well as some of those more defensive areas. Real estate, another higher yielding, a little bit flat for the week, but again, a wonderful fishing pond for those that would like to diversify perhaps their growth and get into some of these higher yielding, more defensive areas, such as REITs. And then as we drill down, we can see that basic materials very sloppy here. It did get hit the hardest on that coronavirus fear. It had a huge snapback. It was next to tech. It was 4.3% this week, but over the last 2 weeks, suffering again. So this is not an area, certainly not one that I have an expertise in, but just looking at the chart, it is rather sloppy. Healthcare, that's another area, 3.9%. And we're going to get into exactly why healthcare has bounced significantly this week. There's a very sound reason for that. But before we do that, and in fact, some of the clues will be revealed as we get into some of the other sector charts, again, using this candle glance view. I've gone ahead. We have each of the major indices, the NASDAQ, the Russell 2000, as well as the Dow, the S&P, and then some of these other ETFs that certainly I pay very close attention to because I want to know precisely where, given these faster moving stocks, and within that, where is the strength. So we can see this very first, again, that RSI is added, descending order. So we're going to go from strength to weakness here with these sub-industry groupings. So up here in the upper left side, as you may recall, utilities and then tech on the sector side. But here on the group side, we can see I have the ETF IGV, and this is actually the ETF for software stocks. And I'm going to go ahead and blow up this chart because you're going to want to see just how strong this group has been. It really has, you just would not know that the broader markets were very much impacted by fear-induced selling. For the most part, we did have a bit of a breakdown for one day below this 10-day, but it did not in any way get close to that 50-day, and for the most part has retained this uptrend. It's up 3.3% for the week, this software index. It's a definite area of strength. And I will tell you that software stocks, in addition to a lot of these cloud computing software names having a lot in the way of growth prospects, they also can be viewed as defensive stocks because of the structure of their sales, their revenues. Corporations sign up for them with contracts, either monthly but mostly annual. And that is viewed as defensive in the sense that they have this recurring revenue stream potential. So that is your first group. And then from there, the NASDAQ, this is going to be all about that technology. But there's one other area that had a tremendous snapback rally this week, and that is biotech stocks. And it's worthy of blowing this up because biotech stocks really fell out of bed. This is well before any kind of news relating to the coronavirus. They did peak in price back here at the beginning or the end of December of last year and started to waver a bit, but we did get significant, even more downside action in response, certainly more than the broader markets, in response to that fear-based selling. This week, this snapback rally, 6.7% performance in these biotechs this week. A lot of big news. Biogen had a very big week. The stock came out with news that they pushed Mylan pharmaceuticals out as far as a particular drug. Biogen up 26%, and then other earnings and FDA approval related news that helped biotechs really bounce back. And that's quite constructive. Biotech stocks, for the most part, are rather risky. A number of them are not experiencing or seeing earnings quite yet. So we're going to go into biotechs. I'm going to show you how, when you see a group pull back, and this can be used in any of these, software and otherwise, one of the best ways for you to uncover candidates that have pulled back but are on the move as far as reversing from that downtrend. So that's going to be really helpful, not only currently, but should we see additional movement going forward, because we're not exactly out of the woods with the coronavirus yet. Semiconductors, another area. Now, this is very China focused. Most semiconductor stocks do experience and purvey revenues directly from China. So it did get a bit harder hit than the markets, but we also got a very strong bounce back rally up over 4% for the week. So semiconductors, it's not every stock, and I'll say that for software as well. While these names and these different groups are bouncing, it is very selective. It's definitely a stock picker's market. Hopefully we'll be able to get into that. But then as we drill down, we can see this is that 10-year yield. I talked about it. Bonds are still very much in high demand. So we can see treasury yields dropping rather significantly. So that's a view of certainly the markets as far as where we are. We're going to take a really quick break. When we come back, we're going to do some work with earnings. I'm going to share those China-facing companies that you do not want to, at this time, be a part of, and then that turnaround within biotechs and other areas. So we will be right back in 30 seconds. And welcome back. I'm going to take you to the StockCharts.com sector summary page. And this is a wonderful jumping off point. Even if you only have time at the end of the week, or certainly the end of the day for those that are more active, you can really get a sense of where the current strength is in the market. So here we are at the end of the week. We can see quite quickly, we talked about technology, materials, and healthcare. Let's go ahead and drill down into healthcare, certainly as a starting point. And what we can see immediately is that big move into biotechs. That was one of the big moving groups this week. I like to highlight this because biotechs, there are over 500 biotechnology stocks. Now, while healthcare providers were up, all about earnings there, it's certainly not as vibrant or as big of a grouping. So let's go ahead, take us right into technology. I'm going to share with you a little hack so that you can potentially get in front of stocks after a significant pullback. So here we're looking, we can see this is each and every week. Really, it's not just today that we see these big outpacers, but I'll tell you, it's going to be a lot of smaller price. This is a $3 stock, or scooters that by and large are not that attractive. So the first thing I'm going to do is sort it. Now, scooter is your StockCharts technical rating. These are stocks that are the most technically attractive. They have characteristics of outperforming the markets and being quite sound. The reason I'm going directly to this is so that, and I did do this earlier in the week as well, and I'll show you how powerful it can be to, quite simply, when an industry group pulls back, you want to get in front of those stocks that have high scooters because they were up in the forefront of their grouping, particularly if it's a very swift pullback. We're talking about that pullback in biotechs being very brief. So let's just go right to this first company. You can see it was up 21%. Now that could be very unnerving, but let's go ahead and take a look at the chart, and I think you'll see something that is really quite compelling, because while it was up quite a bit, we can see that historically the stock does have the ability to have these significant moves once it enters into an uptrend. So we're looking at a daily price chart, and I do like the fact that this stock pulled back very orderly to its 50-day simple moving average. A lot of biotechs got hit. They're still languishing down here. This one very orderly found support and is now forming the right side of a base. Take a look. The RSI, we're looking at a daily price chart. The RSI is positive. And then we can also see down here, I just blew the chart up a little. Take a look at this. This is that momentum indicator that I talked about, the MACD black line. It stayed positive throughout this entire consolidation period, but now this black line is trading up through the red. So that is very attractive. I would not be put off by the moves that it already has had. Again, you want to use history as your guide, and you'll see that historically it does have that ability to have even more in the way of potential upside. So let's take a look at some of I think we just have time to take a look at maybe one or two other names here that could be. So what you can do from here is go ahead and hover over that ticker symbol. And ideally, you want stocks. Let's take a look at MNTA, Momenta. And what you'll see here is a very similar type of orderly, in this case, just back to that pull, that 10-day simple moving average. So here's a stock that withstood the downward pressure in the overall group, indicating strength, and then we're getting that nice uptick here. So at the end of the day, ideally, you can see that when we do have a pullback, in a particular industry grouping, it really can be quite helpful to do this type of exercise. Now, the turnaround did start earlier in the week. This was one that hit my screens earlier because you can see that it was having these significant daily price moves up above these simple moving averages, trending upward. The stock's a little bit overbought here, but definitely has that upward momentum. So that's how we can take a look at some of these turnarounds, or actually once these groups pull back, you can see that they can actually come on quite strongly following that. What I want to do now is quickly cover some of these stocks that their revenue source is primarily from China, or at least a good part. And this is JBL. You can see that the stock fell out of bed, broke below. Now, this is going to be helpful for those of you that want to know if your stocks break down, is it a signal to sell? So from my work, when your stock price breaks below that 50-day, and I'm very familiar, this stock was on the MEM Edge suggested holdings list. It had been a really significant big winner for us. When it broke my heart that I had to remove the stock because it broke below this 50-day simple moving average on very big volume. Also, knowing the fundamentals helps. I knew that this stock was 5G China related, so it does. So take a look at what happens subsequent to that. You have this break. For me, I'm usually out, but if you stay with it, it's now finding resistance at that 50-day. It's no longer finding support to the upside. Now we have this 10-day crossing below the red 50-day. That's called a death cross. And we can go back historically and see that when that occurs, it can in fact be quite negative. Your RSI turned negative, never got positive again. And then here's that momentum indicator with that black line down through the red, and now it is below zero. So that is not constructive. Nike is another one. Over their last two earnings calls, they've cited China sales globally, China as being a big reason. Now this one is trying to reverse. But relative to the rally that we've seen in other stocks this week, certainly within the broader markets, this one is suffering. Certainly makes sense. Starbucks is another well-known company. They've closed even more stores. They closed 2,200 last week. I believe they closed another 1,000 of their Chinese stores. Another one that tried to reverse, but is not participating in this week's rally, so that is not constructive. One other area I do want to share with you is the fact that so many stocks are coming in ahead of earnings estimates. So a lot of this reasoning as far as the US markets doing well, in addition to China's market picking up due to increased liquidity, it has everything to do here in the US with super strong, not only today employment numbers, we're getting a lot in the way of economic data that is supporting continued growth in the US, but also a lot of stocks are coming in with very strong earnings. So we can take a look at any number of stocks. I mentioned this is Biotech, this is Gilead. They came in with good numbers. And another one that I wanted to share with you is Bristol Myers. And we can take a look because what this company did report earnings last week. This has been another nice winner for the MEM Edge report. But we can see that it gapped up in response to earnings yesterday, and it did so on pretty good volume. The reason I'm pointing out to you this is over the last 2 days, 91 stocks have gapped up on earnings. And then over the last 2 weeks, 225 companies have gapped up. Let's take a look at another one that gapped up on earnings today. This is BILL. Bill.com. It's an IPO. Take a look at this gap up here. It's up 15.5%. So realistically, what I want to share with you from here is how you can and generally would trade these stocks after they gap up. So here's BILL. I'm now pulling up a 60-minute or an intraday. Not normally my go-to, but it can be helpful, particularly when a stock is up. We're going to also look at Tesla to show you how you can trade that type of name as well. When they have these big parabolic outsized returns, the more narrowed down that you drill as far as your chart view, there are those that would go to 5 minutes, but 1 hour is my limit because I do tend to look bigger picture, daily, weekly, but here we are on an intraday. We can see this big gap up on the open on the earnings report. The stock pulled back, but on this 60-minute, I have a 5 and a 13-minute as my simple moving average. And in this case, it is finding support at the shorter term 5-minute. And that is really quite constructive. Let's go ahead and look. For those of you that have not been following, Tesla has really been skyrocketing here of late. And I think this will be really helpful for those of you that are in the stock maybe or want to get a better handle on it. So here we are with that 1 hour price chart taking us back to this gap up on January 30th. And again, this can be really helpful for you as far as whether it's identifying a buy point. The stock Tesla did find support at this now upward trending 13-minute. And then on that open in the beginning of February, another gap up that has been sustained. Now, I will argue more recently, this is today's pullback. It wasn't back, it did not pull back a lot, certainly relative to its performance, but we can see that it has undercut those simple moving averages. And again, the narrower or the more drilled down that you go as far as your individual look at a stock, it's going to be, that's how much shorter term your outlook is going to be subsequent to that. So we can see that it's broken below these key moving averages, and then your RSI is below zero, and the MACD is here net neutral. So very super near term, not constructive, but it doesn't mean that we can't have another uptrend like this. So this is the type of action you will want to see to potentially play this very fast moving stock. Next week, earnings season is going to start anew, but before we get into that, let's take a look at some of the other stocks that have gapped up really quite significantly on earnings. This is ELF. This is a cosmetic firm. Not only did they come in with strong earnings, analysts subsequently revised upward their outlook. It has everything to do with their digital advertising, super successful campaign. So we can see this gap up. It retains it, gaps up yet again, retains it. So again, when you see this type of gapping up, you can again drill down into that closer view, if you will. Here's that gap up, retains it, gaps up again. So that is one of many. I mentioned there's about 90 stocks over the last 2 days. I certainly have courses at MEM Investment Research on how to trade the gap up after earnings. For those of you that have a curiosity and would like to get better as far as knowing precisely what to be on the lookout for and how to trade. So let's talk about next week. I have a couple of minutes left here, and we can share some stocks that are due. We certainly don't have the plethora of names we've had over the last couple of weeks, but there are still significant names that are due to report. We can take a look within software. This is Shopify, another big winner within the software space. They are due to report. Now, when you're looking at stocks that are upcoming and are big growers, such as Shopify has a 400% earnings increase estimated for 2020. So a big earnings grower. But oftentimes you can take a look at historically when that company reports how they tend to do. So I can take us back certainly to the beginning of August. This was their release of earnings. The stock did have a very nice uptrend. This is when the entire software group did fall out of favor. But I'll tell you that Shopify historically does have a history of reporting certainly good numbers, but also responding positively. It doesn't mean they will, but Roku, this is another one that is due to report. They're going to come out with their numbers on Thursday. We can take a look at the end of July. They came out with their numbers, gapped up, advanced further. They also had a very similar move here in November, but the chart overall is certainly not attractive, not one that I would, but I'm just trying to point out how you might be able to use history as a guide. As for instance, Hasbro gapped down. Their earnings, for the most part, their last 2 reports have been really quite negative and not a very attractive chart. Pepsi is due to report. This has been a nice winner. The stock is a 2.3% yielder and looking really quite attractive going into numbers. Coke reported last week, gapped up, all about their energy drinks and zero-calorie drinks. So you'll want to keep an eye on that. I am getting very close to the end here, but I would be remiss to not share with you the fact that we are seeing the equal weighted S&P 500 kind of fizzle a bit here. And that's relative to the markets. It's down more than the market. It was not up as much yesterday, indicating breadth may be suffering a bit. And we're seeing a lot of these larger names, that are doing well. But I'm going to leave it at that. Happy trading.